Hello guys, this is SyntheticGoddess. So welcome to this video. In this video I quickly want to share a very crucial secret and very important secret for you to learn with, so that you can actually use it in your day-to-day trading life. Okay? And this secret is that before picking a PO high, you need to know the PO high that sponsored the retracement. Before picking a PO high, you need to know the PO high that sponsored that movement. This is one of the first things you should actually do whenever you enter the market to trade. It's one of the first things you need to do when you enter a trade. You need to look out for the PO high that sponsored that move to be able to determine the next PO high you are going to use. This is very much important. It is very much important for you to know this, so that you don't just pick anyhow PO high and you get stopped out or used as liquidity, and at the end of the day the market moves in your favor again. So you will know the strong PO highs that you need to see, and those PO highs clear liquidity. They are PO highs that clears liquidity. We have a strong PO high, we have a weak PO high, we have a very strong PO high, we have a very weak PO high. So it is going to be used to determine your next PO high, the next move. Okay, so let's take, for instance, I've seen one over here and I would want us to take a look at it. Now we had a PMS to the upside here. We had a PMS to the upside over here. Meanwhile, this is just the liquidity based on the daily time frame, looking at our structure range, but then we are classifying this as a PO high. But looking at this structure range, I am definitely going to mark out a PO high over here. So at the long run, see what the market did. It actually deceived people in here. And not just deception, you can actually enter for a buy move here and be profitable. Here is the reason. After we had the formation of this other block, we had an impulsive movement to the upside. We had fair valued gap over here that was not closed. As you can see, the market just rallied down a little bit, and then it did not enter into this other block. It did not enter into this particular demand zone. This demand zone was not tested. It was not tested at all before moving to the upside, and we had a break of structure. Now looking at this on a very higher time frame, we are in a downtrend. We are in a down move. So we shouldn't really be looking for a buy move in this particular market. But looking at the 4 hours time frame, we might actually get some intraday moves. And range trading inside range. We might actually get one of that, because as you can see, this actually looks like a break of structure, but basically this is the major break of structure and we did not break it. Looking at the higher time frame, this is the normal break of structure for us to continue to the upside, but we did not break it, and this move did not test this PO high over here. It did not test the supply zone over here. You can see where it stopped and where it turned back. So we had a move to the downside. We broke this structure. Basically we are calling it a break of structure in intraday. Okay, in intraday we're going to call it break of structure, because even if you look at H1, it is definitely a break of structure on H1. It is break of structure on H1, which is an intraday trading. So if you are also an intraday trader, you're going to really benefit a lot from this particular move we had over here. Now we had the movement to the upside. And when we tested this PO high, we broke this low. This particular low. After breaking this low, we move to the upside to test this place. Now basically what you should look out for here, because if you want to enter another trade, there's nothing stopping you from entering here at this supply zone. There's nothing wrong in picking out this supply zone over here, but we had a strong sponsor of the retracement. What do I mean by that? We have a strong sponsor of this move to the upside, so we are clearing liquidity. There's nothing bad in picking out this particular place as a supply zone, this place, so we could use that to continue to the downside. But instead of that, we had a nice test here. We had a strong POI here. This is what you should look out for. We have a strong POI here. You can see immediately we created this demand zone. This demand zone that is here. Immediately we created this other block. when we created this order block, we moved to the upside. This move did not give a proper test. It did not give a proper test, meaning when the market is coming back, we probably might react to this zone. We might probably react to this zone, and that is why you see a lot of reaction zones in the market. That is why we have a lot of reaction zones in the market. Now, this move went to the upside. You could have even classified this as a liquidity to be taken for market to continue to the upside, but no, this is actually a break of structure already to the downside, a range structure break. Sorry, an intra market structure break, because it is an internal structure. It is an internal structure, so we already broke it. So definitely we should be taking this low and this low. Our next target should be here, basically the primary point of interest. Since we've broken this internal structure, this intra-structure, our next target is taking this low and coming to this primary PO high to move to the upside and see what the market did after we broke this. It tested this correctly and went ahead to give us a proper test again at supply zone. Remember, I said market moves from one supply zone to a demand zone, and it moves from a demand zone to a supply zone. That is basically how the market moves. This is a valid zone here. It is actually a valid zone, but you could actually mark this as a valid zone also, because see the impulsive movement we had to the downside. See that impulsive movement. This did not go back to test it very well, so we could even use this as the liquidity and then use this place as PO high to continue to the downside. But no, since this is a strong PO high that is sponsoring the move to the upside, this is a strong PO high sponsoring a move. This is a strong PO high sponsoring a move. My next move is going to be from the primary zone, from the primary point of interest, from the normal point of interest, where the origin of the market, the origin of the first move. The origin of the first move is going to be my next target to mark out my POI, because this is actually very strong and it just triggered the market to move, and immediately we broke this place. Some traders, we call it break of structure, just enter the buy here and be targeting this high. No, just enter the buy here. As you can see, you can enter the buy at this order block and still move to the upside, but you are not targeting this high because we already have a break of structure. We had a break of structure to the downside here, but then this particular PO high is a strong PO high. Is a strong PO high that cannot use anyhow PO high to continue. It cannot use anyhow PO high to continue. It has to take liquidity so that it can have enough strength to come and take this, and use this place to continue. To take this and use this to continue. So the market needs enough liquidity to move. It actually needs enough liquidity to move, and that is why we are using this PO high, a strong PO high, to take the liquidity we will use to move to the downside. Okay, assuming the market just assuming we had a proper test here, maybe we had a proper test here and the market just broke this low and we moved to the upside, perhaps we might be using this PO high to continue to the downside. But this place is a valid zone. It is a valid zone. It is a really valid zone. In fact, this place is also a valid zone. This place is also a valid zone. Looking at it here, let me see. Okay, seems we had a reaction there also. This is also a valid zone. Yes, a very valid zone. This is a very valid zone also. Yes, I would have just entered the market here, put the SL here, and just target a liquidity point that the market might be taking. Okay, I guess. Okay, good. You can see the PO high I marked out here. See the PO high I marked out here. The market totally respected it because this did not even enter it. This did not enter the PO high. This is the primary PO high I'm looking out for, and the market tested it very well over here and it's moved to the downside. This is a proper zone. It is a strong zone. It is a strong zone and it needs liquidity to continue to the downside. Imagine we have a break of structure here to the downside. We have a break of structure to the downside here. Your next thought would have been this particular supply zone. This supply zone, you would have entered at this supply zone. But no, the market used a strong PO high. It used a strong PO high to move to a stronger PO high. It used a strong PO high to move to a stronger PO high. You really need to check all this. Assuming this place was filled. If it was filled and this place was tested, we won't be having that kind of move. So we have an untested zone here also. This is an untested zone also. It is also an untested zone, which is our primary zone. It's our primary zone, the origin of a move, the origin that sponsored this particular move to the upside. So this is the origin. So the market tested it very, very well, but I am not expecting, the only place I am not expecting the market to break is this high. I'm not expecting the market to break this high. If it breaks it, we are in a bullish move. We are in a bullish structure. We are in a bullish structure if it actually comes back to break this high. If it breaks this high back, we are in a bullish structure. So we have the move here. Normally you could have just taken the trade here for a buy move, and the market would have moved to the upside. Though your TP might be here, you might be open and aiming for this high to be taken, but we have a confirmation around this place. We have a confirmation around this place that should make you exit your trade. If you check the lower time frame, there is a confirmation around this place because it's at PO high. We have a confirmation around this place for you to take out your trade, for you to TP. So we had a confirmation here. You would have seen it on the lower time frame, perhaps on the 15 minutes or 30 minutes time frame. So we had a strong PO high, moving from a strong PO high to a stronger PO high, moving from a strong demand zone to a strong supply zone, causing it to move to the downside. So it really respected the supply zones because we are in a bearish move. We are in a bearish move. This move is a bearish market. This particular pair is a bearish market. So assuming this particular PO high is a very weak PO high, there's nothing wrong using this PO high to continue to the downside to break that low. We would have used this PO high. This PO high would have been very, very valid because after this PO high was created, we had the positive move to the downside, and as you can see, the market reacted at that zone. It reacted a little and moved up again, going to where it was going, because this place is very, very valid. It is very valid. So a PO high that is valid, you are expecting the market to take the liquidity and move to the origin of the market or a stronger supply or demand zone to continue the movement. In the next video, I'm going to explain more on this. This video is going to have a part 2. It's going to have a part 2. So I'm going to explain more extensively on the part 2. Thank you so much, guys, for watching till the end. Keep living in the atmosphere of profits. Thank you.